Now, the local index and currency will be hoping to stage a slight rebound today after a flat trade yesterday. The JSE was weaker, while its peers were mixed as investors focused on the release of the U.S. Federal Reserve's minutes. Investors are hoping minutes from the Federal Open Market Committee July meeting will give clues regarding the Fed's forward thinking on inflation and interest rates. Let's expand on this. Grant Nader, Senior Portfolio Manager at Benguela Global Fund Managers, joins us now to talk through these and other business news. Grant, very good morning to you. Thank you so much for your time. Perhaps let's start off with an overview of how the markets are faring so far this morning.
So far, a really sort of quiet start. Markets are definitely trying to stage a little bit of a recovery, as you said. It has been a tough week. We've been down 4 days in a row, and a fairly decent amount on each of those days. And a little bit of a quiet start, which I think is a good thing. Hopefully, we can stabilize at this point.
Oil and gold are also under pressure today. What's going on in that space?
I'm sorry, we seem to have a connection.
No, not a problem at all. I was talking about oil and gold.
Do you mind repeating the question?
Yes, sure. Oil and gold are also looking slightly under pressure. Perhaps just to give us an update on what's happening there.
Yeah, so gold are holding up relatively well. Still off its highs, but around 1930. The sector that's taken the most pain in the commodities is copper, palladium, and platinum, as concerns around China's slowdown and the property market in China seem to take the shine out of those metals. Palladium's down, I think, a good 6% for the week, and copper down 2.5%. Oil is actually holding up, but remember, it has staged a very strong recovery over the past month, and thankfully it's actually given a little bit back over the past few days. It's down flat today, but down a good 3% over the past week.
Standard Bank Group results announcement for 6 months ending the 30th of June of this year. How have they fared?
I thought it was an excellent set of numbers. Headline earnings up 34%. They saw really strong results out of Africa. The franchise there performing incredibly well, delivering a significant ROE well in excess of the South African business. Having said that, SA did very well across all business franchises. Their credit loss ratios came in a lot lower than some of their peers, Nedbank and Absa, which is either a sign of much better lending practices or potentially that they still have some more pain to come later on in the second half of the year, as they haven't yet seen it come through their book. Overall, I would say a very strong result. Loan advances grew nicely, and operations and trading cost control was good, and trading revenue as well was pretty solid.
Very lastly, DRD Gold published a voluntary trading statement and trading update for the year ended 30th of June. Talk us through those numbers.
Not a bad result from DRD. Headline earnings up between 8 and 18%. They had half of the operation did really well, increased the quality of their outputs, the yield, and they managed to compensate for the load shedding and some of the operational challenges we know many of the miners are having by a weaker rand, which generated some better revenues, and managing cost control where they could. So a very good cash generation. This business is still net cash positive, no debt on the balance sheet. They're sitting at around 2.5 billion rand on the balance sheet. So I would say under the circumstances and given the challenges being faced, it was a really solid set of numbers.
Very well. Thank you so much for your time, Grant Nader, Senior Portfolio Manager at Benguela Global Fund Managers, giving us a sense of what the business front is looking like.